welcome to MasterChartsTrading.com market recap for the week ending Friday, December 19th, 2014. This week, markets rebounded sharply following the previous week's declines. This happened on really good market breadths as well. Small caps turned long-term bullish again, and I will talk about what I thought was a double top, but I believe now it may be over, and we may see new highs in small caps. Treasuries reacted to Fed speak, and we'll look at the charts. Gold miners are still indecisive, and I'll show what I mean by indecisive. Oil stopped falling, at least temporarily, and with it, the oil-related equities and countries that produce it had just a very strong rebound. So let's go into the charts, and it's already Russell. Let me get back to S&P 500. So this is a chart I've shown in the past. It's of S&P 500 large cap index, and long term you can see it's bullish. It's been bullish since at least 2011, probably earlier. Now on October 21st, following quite a significant decline, we entered the market right there, and we gained about 6 to 8% gain right there, depending on where you exited. Finally, right there on December 12th, we exited the position that was bought on 21st of October, and market declined substantially and quite sharply as well. And I thought that it's going to continue lower, but it stopped falling, and the correction was really short-lived possibly because of seasonality. In other words, December is a strong month for equities. So finally, right there on 18th of October, we had a signal that we were looking for, and we re-entered the market right there on the 18th of October. So we now have an open position in S&P 500 fund, SPY. And so next one, and then we'll look at the breadth. So this S&P 500, same thing, and you could see a sharp decline right there, and then finally right there we entered the market. You could see right now the market breadths, so percent of stock above the 50-day EMA, S&P percent of stock about 200-day EMA, it's bullish. The S&P 500 bullish percent index is bullish. It's above 50%, it's actually at 72, and it's above its moving average as well. And most importantly, the New York Stock NYSE new highs, new lows indicator flipped back into the positive territory right there. You can see it better right there, and that's an important signal for me as well. And S&P 500 advanced decline line, so far I see no divergences in it. In other words, right there was a new high in S&P 500. Oh, sorry. S&P 500, and the advanced decline line confirmed it by also registering a new high right there. So for now, S&P 500 and the majority of the market is in a bullish mode with bullish breadth. Now the Russell, I had an open position, short position in the Russell 2000 because it was bearish since October 7th of this year right there. Sorry. Now I do believe that right now, see like the Arun right there, the green Arun surged to 100, and I do believe that on the 19th of December, which is last Friday, just this Friday, we had a breakout in small caps, and it's finally going to negate the double top I was referring to. And to see the double top, I'm gonna go to more 2-hourly charts. So Russell 2000 small cap index, same thing. You could see double top, then it kind of declined and made a lower low, which was a a big important sign. But finally, right there, I had the open short position on December 12th, and it declined a little bit, but it reversed really quite sharply in the last 3 trading days or so. And finally, I closed this position right there on the 19th of December because I believe that the Russell 2000 broke out above this resistance here, and likely new highs will follow. This position was closed with a small loss, so sometimes that the trade just doesn't work. With sometimes it doesn't work out, and you have to cover your losses. Important thing is to cover your losses while they're still small, and this was about what 2%, not even 2%. It was a tiny loss. So basically move on with your life. It happens. Next, let's look at bonds, TLT, treasuries. So there was a FOMC, a Fed announcement, I believe sometime this week, I think on Wednesday, and bonds reacted quite negatively to it. The TLT gapped down and sold off, but on Friday they actually regained quite a bit. They regained 1.34% on Friday at the close. So bond market is still in an uptrend until proven otherwise. At the very least, the long-term bond market is in an uptrend. Short-term, there is some talk about normalization of interest rates, which is fine. But I would rather just take a look at the bond market funds itself, and I can see that it's in an uptrend. So buying dips in an uptrend will work much better than shorting the rallies in an uptrend. And I have an open position still. I opened on 21st, actually a little earlier. I opened it right there on November 7th, added to November 21st. We did take profits right there on 18th of December, and a little bit earlier as well. I think a couple of days last week as well, we took some profits. So we still have quite a bit of position open in TLT. And bonds are in an uptrend until proven otherwise. Gold, long-term downtrend. This is gold miners ETF, GDX. It's in a long-term downtrend, and once again, shorting the rallies is, in my opinion, much better than trying to pick the bottom. So counter trend bounce failed on November 17th. Finally, again, we entered the short on the short side on November 28th. This position is very indecisive. It's going up and down around here, and it's been just chopping around like there's no tomorrow. It's still bearish, so I'm going to keep the bearish outlook on this until proven otherwise. Ideally, it should close. The GDX should close below around 17 on a weekly close basis, like on a Friday. It should close around here and around 17, or if this short trade were to fail, it should close above probably around $20 and break out to the upside. Still, I maintain a bearish bias on GDX and gold in general as well. Oil had a very nice rebound, especially on Friday, gained almost 5.8%. This is USO, United States Oil Fund. So gained 5.8% on a Friday. But as you can see, the decline from July was so strong. It was like, what, as much as 40% down here. And you can see that Arun red is still above green. So even with this, you can see that it looks like it's bottoming right there. The momentum is shifting to the upside. even with this significant rebound on Friday, if you're trading oil straight up USO, I'm not comfortable entering even for the counter trend rebound because the green rune is still below red. It needs to do this thing. Green rune needs to surge to 100, make a kind of move to the right first, but it hasn't happened yet. So it might just, do this number, come up a little bit and continue down again. We'll never know, I guess, but we need to watch it. XLE, Energy Select Sector SPDR, I had an open short position on started November 28th, right there. I closed this position with a small gain on 19th of December, right there, because it could be like a bear trap. It kind of dipped below this important level of 77.51. I highlighted this last week. It kind of dipped below it, but just rallied right back up. So for now, it's counter trend bouncing. If oil decides to take another nosedive, then very likely energy-related equities will follow suit as well. And just to highlight how strong this rebound was in oil-related equities, I wanted to show Russia. So Russia has been hammered really tough, hard by declining oil prices and collapsing ruble, and especially around here when it just broke all supports and collapsed. So that's Russia, 37% down. However, you can see on let me see, when is this? On December 16th, it made this candlestick, which looks like a big white candlestick with a wick out of the bottom. So it seemed like there was some buying interest right there on humongous volume as well. So it's kind of like a textbook example of picking a nice bottom there, and then next day it followed through as well. So of the low, if you were to buy right there, that's a significant bounce. It's like 30% bounce right there. So this is just in 4 trading sessions, and this is exactly the rebound in oil is producing this kind of action. I'm not playing this, but I just want to highlight that there's a potential for oil bottoming, and we'll see if it's indeed true or not. Okay, that's it for this week recap. If you have a chance, please connect to us on our website, MasterChartsTrading.com. Sign up for our mailing list, and you will get this email each Friday. I usually send it out on Sunday. Twitter, Facebook, and StockTwix accounts. Connect to us there, and you can send us direct email to this address. And of course, all of the charts, or most of the charts that you see in this video, are located at this public address in StockCharts.com website. Thank you for listening, and have another great trading week. Goodbye.